Well, good morning and hello. It's me, yes, Kenny Polkara, your host of the party. And today is Tuesday, July 23rd, 2024. And look at behind me. It was a rainy, stormy night all night, and the clouds are there above us. You see that you don't see any blue sky at all. It's kind of dark gray clouds that are hanging over all day and expected to hang over all day. And while the water is calm, the sky is not. And so let's just see what that says about not only the weather today, but maybe how the markets might respond. So here are the things that you need to know. Well, stocks bounced on Monday. Techs and the semis really taking the lead. Cybersecurity still under pressure. The CrowdStrike continues to get blown up. Earnings are now in full force, and 80% of corporate earnings are beating the estimates. Tesla and Google report after the bell today, so that's all very exciting. The Dems raised more than $200 million in the 24 hours after JoJo pulled out. And what do we have at dinner tonight? We're going to have the pan-seared flank steak with a red wine shallot sauce. Very, very good. Okay, good morning. I think I just need to start today's note with some basic understanding about what role the most recent political events mean to investors and the markets. Why, you ask? Well, because so many people are wondering now what they should do. What does it mean? And should they change course? Okay. Well, yesterday in our investment committee meeting, our chief investment officer and senior portfolio manager, Dan Payne, who's got more than 35 years of investment experience, made it very clear. And I thought it was something that would be helpful to share with the readers and with some clients because it's clear, it's concise, and it's spot on when you think about long-term investing. And here it is, and I quote, "The political events of the past month have run the gamut of horrifying, comical, sad, patriotic, and downright flabbergasting. I want to remind everyone that the proper investment response is actually the polar opposite of the speculation and the hand-wringing that we've seen from the mainstream media and political pundits. And while we can all make sport and somewhat lighthearted comments and predictions of what we think may come to pass, let's be sure not to lose sight of these very important truisms when investing. The first, the current stage of the economic cycle and continued growth in earnings is much more important than the sometime rough winds of political change. Our clients and our long-term investment success will be determined by the continued execution of our investment process and philosophy. And our focus is on identifying and owning durable and resilient companies that have demonstrated the ability to grow cash flows and distribute such to its owners regardless of the political environment. And for investors, you should never buy or sell a security based on politics or any politician. That said, there are some political events and outcomes that do necessitate modifications in asset allocation and or sector weights over time. So over the coming weeks and months, we will be monitoring these political winds and we will make modifications where appropriate. In the meantime, the next 100 days are likely to be, well, I'm going to leave that open and you can fill in the blank. Okay, so let's get on to what happened. The stocks rallied hard on Monday, right? The Dow up 128, the S&P's up 60, the NASDAQ rallied by 280, the Russell up 37 points, the Transport up 116, and the equal-weighted S&P gaining 54 points. Broad tech was way out in front. The XLK gaining 2.4%. Subsectors like semis were up 4.1%. NVIDIA itself was up 4.8%. Cybersecurity, though, remained under pressure, down 0.2%. Think CrowdStrike, that was down another 13.5%. Behind tech, we saw strength in industrials up 1%, consumer discretionary up 1%, real estate up 1%, utilities up 0.8%, healthcare up 0.6%, financials up 0.6%, communications up 0.4%, basic materials up 3%, while energy actually lost 0.6%. Think ongoing pressure on oil as a ceasefire remains an option, removing the risk premium that we've seen in oil, as well as the idea that there is about to be an oversupply in 2025. And while that's still a while away, the markets always react 4 to 6 months out, right? It's a discounting mechanism. Down the food chain, we saw strength rebounding in housing up 1.8%, disruptive tech up 2.2%, the growth trade was up 1.5%, aerospace and defense up 1.5%, big pharma up 0.5%, biotech up 1.5%, and the list goes on and on and on. And like Dan said, the current stage of the economic cycle and continued growth in earnings is much more important than the sometime rough political winds of political change. The latest Bloomberg Markets Live Pulse survey expects earnings to boost the S&P during the earnings cycle and beyond. 310 of the 465 survey respondents expect stocks to resume their upward trend due to the coming earnings season. So far, 14% of the S&P 500 companies that have reported, that's 70 of them, and of those, 80% of those, 56 companies, have reported a positive earnings surprise, and 62%, 44 of those, have reported a revenue surprise. The earnings growth rate is on track to be up 9.7% year over year. And if that holds true, then it's going to be the highest year over year earnings growth rate since the fourth quarter of 2021. In terms of valuations, though, we expect the S&P to earn $243 a share this year. The forward 12-month PE for the S&P right now is 22.8 times. That's a bit rich versus the 5-year average of 19.3 times and the 10-year average of 17.9 times. And all that means is do not be surprised to see some ongoing volatility, especially as we enter the seasonally weak time of year, August through October. Just remember, last year saw an 11% decline in the S&P between August 1st and October 30th, only to see the market rally 16% between October 30th and December 31st. Gabish? Okay, volatility, which had surged last week, fell by 10% yesterday to end the day at 1491, just a hair above the trend line at 1410. If we continue to get strong earnings reports with robust guidance, then I would expect the VIX to plunge right through those trend lines to settle back in around the 12.5, 13 range, which is about a 14% decline from here, which should add about 2% to the S&P and maybe 3% to the NASDAQ. The sell-off, which really wasn't a sell-off for the indexes, right, but was much more so for individual names, took some of the fluff out. And for those that sat tight and didn't panic, you are glad you did. Because if you sold out and now you're jumping back in, what have you really done? Nothing other than create chaos in your investment account. If you're trading, then go for it. But if you're building a long-term investment account, you got to get the trading mentality out of your head right now. It does nothing but create noise and distraction. And yes, sometimes you do need to tweak your portfolio, but that is different than blowing it up. Earnings today include some big economic behemoths: UPS, General Motors, Kimberly-Clark, Philip Morris, GE, Sherwin-Williams, Lockheed Martin, Coca-Cola, Pulte Homes, and HCA. After the bell, we're going to get Tesla, Google, Texas Instruments, and Visa. Eco-data today includes the Philly Fed Services Report, the Richmond Fed's Business Conditions Report, and existing home sales, which are expected to be down 3% month over month. Bond prices declined just a bit yesterday, sending yields up just a bit. Nothing to get all worked up about. The 2 years now yielding 4.52%, the 10 years yielding 4.26%. All this as we await the economic data, including the Fed's favorite inflation gauge next week, the PCE report, and the Fed's FOMC meeting, which is next week. I do not expect bonds to do much before we hear from JJ on July 31st. Rates are expected to remain unchanged at 5.25% as he hints about a rate cut in September and possibly November and December. At least that's what the market is expecting. I'm in the camp that they should not do anything at least until November, post the election. But I don't think anyone's really listening to me. Anyone at the Fed is not listening to me. Okay, oil continued to decline on the Mid-East ceasefire narrative, as well as the supposed weakened demand. While the oil market is tight at the moment, it is expected to loosen in the next year, which I am not sure I really believe is happening because demand is expected to continue to grow. Remember, the markets are discounting mechanisms. They're not trading on the current data. They are trading on the data 4 to 6 months out, the same way that stocks trade. So the fact that prices are weakening is because of the expectations coming the new year that there's going to be an oversupply, less demand. Gold was all over the place yesterday, traded as high as 24.60 overnight into yesterday morning to a low of 24.35 by noontime, only to end the day down $1.50 at 24.45 an ounce. I think much of that was attributed to the political drama on Sunday into Monday. But ultimately, it settled down as it waits for the economic clarity, right? The GDP, which is due out on Thursday and is expected to be 2%, and monetary policy clarity from the Fed next week. In any event, in times of uncertainty, both political and economic, gold is always a winner. Now, this morning, U.S. futures are mixed. Dow futures up 40, S&P's up 3, the NASDAQ was down 15, and the Russell's up 6 as the market awaits the earnings reports. Already we heard from GM. They announced and they beat the profit estimates. They raised their forecast on truck demand, and they boosted fiscal year adjusted earnings per share. The stock is quoted up 5% at or $2.60 a share at $52.20. And that's only the beginning. So far, at 6:50 a.m., we heard from Dan, Eric, Kimberly-Clark, Pulte Homes, GE, DGX, and they all reported and beat. UPS, an economic stalwart, missed amid higher labor costs and uneven demand. That stock's getting crushed, down 7.5% in the pre-market, trading down at $134.40, down $11. News that Kamala has received enough delegates to endorse her makes her the most likely candidate come November, unless, of course, the Democrats change the rules the way they did to stop anyone from challenging JoJo in the primaries. As a result, she is on her way to Wisconsin, which is a battleground state, to try and convince them that she is the choice come November. Just another reason to buy gold. In addition, we learned that the Dems pulled in over $200 million in the 24 hours after JoJo pulled out. Now, that's an interesting stat, don't you think, that all that money came in after he was no longer the candidate? But that's for another time. The S&P closed at 55.64, up 60 points, leaving us in the 5,500, 56.50 trading range. Remember, I said I think we need to test trendline support at 54.20 in the short term, which I think we're going to do. And if last year is any indication of the seasonal trade this year, you should price in a 10% correction, just so you're not surprised during the August to October timeframe. And that would take us to S&P 5,000. Just above the long-term trend line that's currently 49.50. Now, if that does not happen, then you're happy. And if it does happen, then you're mentally prepared and you had your shopping list ready to take advantage of those price dislocations. From an investment perspective, continue to focus on the long game, take advantage of any chaos created by DC, but most importantly, do not make an emotional decision in either direction. Remember, having a plan and staying focused is key for the long-term investor. Give me a call to discuss, because I'm always happy to discuss it. Okay, so what do we have for dinner tonight? This is really a simple dish. It will become a fan favorite. It sounds more complicated than it is, right? It's pan-seared flank steak, and you make with a red wine shallot sauce. It's easy to make. It presents beautifully on the table. So for this, you're going to need the flank steak. You need butter. Of course, you need butter. You need garlic, salt and pepper, red wine, shallots, balsamic vinegar, a nice good thick one, and some olive oil. You want to begin by melting the stick of butter, right? Just melt it and then let it sit there for a minute. Now, season the steak with salt and pepper. Add the chopped garlic and then massage it into the steak all over. Now, pour the melted butter all over the steak and massage that into the meat as well. Then cover it and just set it aside until we're ready for it. Now, in a small pan, you're going to melt another half a stick of butter with some olive oil. This way the butter doesn't burn, right? Just a splash of olive oil. Now, toss in the sliced shallots, maybe 4 shallots or so, depending on how big the steak is. Saute those for about 5 minutes or so. Now add in 3/4 cup of red wine. Your choice, pick whatever you want. You don't pick a Chianti, that's fine. And 2 tablespoons of nice thick balsamic vinegar. Bring it all to a boil and then turn it down to simmer. Reduce it by half. It's only going to take a couple of minutes. Turn it off the heat and then whisk in 1 more tablespoon of butter, because you can never have enough butter. Now, preheat the oven to 400 degrees, right? You've already preheated that 400 degrees. Now, in a large oven-proof skillet, add a touch of olive oil and heat it up till it gets nice and hot. When it's ready, add the flank steak to the pan and sear it on both sides, 3 to 4 minutes maybe per side. Now, place it in the oven, in that oven-proof pan, for 5 to 8 minutes, but depending on the thickness. Make sure the oven is already heated. Once it's done, remove it, cover it, let it cool for 5 minutes. Prepare to serve. Prepare the platter that you're going to serve around with fresh kale. Slice the front flank steak across the grain and arrange it on the platter on top of the kale. Looks great, right? Now you can now spoon the red wine shallot sauce over it all, or you could keep it on the side and let your guests serve themselves. I like to serve it over it, and then always keep some on the side for your guests so if they want more. Serve this dish maybe with smashed roasted potatoes and a large mixed green salad. In any event, it's delicious. Today's the perfect day for it. Until tomorrow, take good care.